Financial stocks are on a roll this year, had a great year last year, but not all financial stocks are created equal, says my next guest, Randy Bateman. He's here to give me some of his favorite financial picks. Welcome, Randy.
Great. Thanks, Greg. How are you?
I'm doing pretty well.
Good.
Now, bank stocks did great last year, but you're not crazy about all the banks, right?
Right. What we are looking at is a change in the industry. We're seeing the passage of the Dodd-Frank bill. It's going to have a number of provisions that are out there. We don't know what's going to all be the cost associated with that, but we do know there's going to be a cost. We saw this in the passage of the Sarbanes-Oxley law back in the earlier part of the century, and we saw a lot of companies that basically capitulated. They felt that they couldn't cover the cost of regulation, so they merged, they found a bigger partner, or they went private, or they went offshore. We think some of the same things are going to happen in the financial sector with the passage of this Dodd-Frank, that some of the companies will indeed start to be merged, and I think that's going to play into the hands of a company like Evercore Partners, who is a boutique merger and acquisition facilitator. I think it's got some big opportunities.
But this has nothing to do with the size of the banks. You just like Evercore, right? This is not a statement on too big to fail.
Correct. I think it's just basically, we know that there's going to be more M&A activity, and that's just going to basically play into the financial opportunities that Evercore is going to find.
The other trend we're seeing, at least at Morgan Stanley, is they want more brokers. Now, a stock that you like is Raymond James. They also have a lot of brokers in the field collecting those assets under management, trying to bring in people's money. Is that why I like Raymond James?
A couple of reasons. Obviously, we're looking now with a lot of tailwinds from this market. It has propelled the S&P 500's normal PE up to about 20 times earnings. Looking back at history, we've seen in the fact that typically when you reach that level, it really draws in the public. They become enthusiastic about the market, want to play it again, and I think that's going to obviously aid trading costs. And at the same time, we've seen this market tailwind provide a lot of AUM growth in their mutual funds and their managed assets, such that those fees will be trotting right along behind the AUM growth.
Stock's certainly on a nice run. Thanks for coming, Randy.
Thank you, Greg.
And thank you for watching The Street.